Good morning, everyone. Welcome to Hit the Bid here on March 29th. This is Ty Robbie here with your Week 13 Market Watch. Today we're going to run through these charts and see what happened in the markets over the last week and see what we need to be ready for as we head into Week 13. So let's jump right in and get started. First on the board today, we got our June live cattle. We did see a big character change here in this cattle market last week, both live and feeder markets, finishing on Friday up there at new 20-day highs, which sets this cattle market up for a new uptrend as we move into Week 13. But before we dive into that, we are going to take a look back on Week 12's action. For this June live contract, we did open up in about a 4-day balance period here. Monday through Thursday, we saw this market trading in about a $3.50 range here as they did battle it out here in the mid-230s. We did see a lot of overhead supply here over the last couple of weeks as these 234 to 236 area was keeping the cap on this market. For the first 4 days last week, we did see this both buyers and sellers battling it out here. Thursday's action, it did look midweek like we were going to start to roll over and continue that downtrend. However, Thursday's action opened up down here on these lows. Bulls defended our major moving averages and that Monday's opening range low. Seeing a nice strong finish there on Thursday did set those bulls up for a nice strong finish there on Friday. All week long, we discussed how this 236.5 level was going to be the line to beat. Bears tried hard to defend that all week long, but just couldn't hold on to it there on Friday. Nice opening range breakout on Friday. Saw this market moving higher early, getting above Tuesday and Wednesday's highs. From there, it attacked that 236.5 level, and any bids above that got those bears to start throwing in the towel. We saw those sellers start to fold here, which really saw this market really threw the fuel on the fire there as we saw this live cattle market rally right up there back towards 240. Really heavy volume buying pressure here, closing up there at new 20-day highs. All good technical signs that this market should see this uptrend get back on track. With that being said, we got our bull pivot up here at Friday's high at 239.30. We should see those bulls try and take this momentum from late last week into next. Look for them to get some bids up here above 239.30 to start rallying up there in the 240s. We still have this big overhead gap that was created from that mid-October breakdown. So this will be target one. Look for those bulls to come up here and try and chew through this overhead gap. And from there, we are not far off from these all-time highs up here on this June contract at 244.5. If those bulls are able to keep this momentum rolling early, we should see them start to target some of these areas up above. We should see new yearly highs print here early in the week. Look for those bulls to try and strike hard and fast here early in Week 13. Even if they do start to slip, we got this reversal point here and our major moving averages down here acting as good support. So those bears need to get a close back down here below 232.37 before we can start suggesting any sort of weakness again. Was a valiant effort here, but those bears failed to keep this market rolling. Downtrend failed here on Friday, setting this market up for some more upside. We should see these bulls continue to rally here into Week 13. Look for this market to start attacking these current year's highs, and from there, it's going to be targeting all-time highs. So look for this cattle market to get back on track and keep moving higher in the week ahead. Next up, same story over here in this feeder market. We did see a little bit more upside early this week, or early last week. Monday's action bouncing out there below those major averages. But see on Tuesday and Wednesday, we saw a couple pokes above that prior week's high. We did see some good traction there on Thursday, kind of like that live market, opening up down here near those lows, but rallying up there into the highs on Thursday. Set those bulls up for a nice breakout opportunity there on Friday. And as we see here, just a nice strong breakout off that opening range, rallying right up there towards 360 into the late part of the day. Picking up about $8 here for this May feeder contract, opening up there and making a new 20-day high on Friday. With that nice strong close here that sets these feeders up for a continuation of the uptrend as well. This downtrend failed here with this big breakout on Friday. Heavy volume buying pressure here. We are completely rolled over here into this May contract now, so we should see some pretty heavy volume buying pressure carry over into the week ahead. Look for bids coming in early tomorrow above 360.42 to have this market rolling back up here in the 360s. Current year's high is up here right around 367 on this May contract. We got an overhead gap here as well in this feeder market. That's going to be a spot that is going to be target for these bulls as well up there near 370. And from there, we are still only about $16 off these all-time highs. So look for these bulls to try and get some more traction here early next week. Even if we do start to pull back, anywhere here in Friday's range should offer good support. And as long as we are trading above these major averages, we should see these bulls have a nice chance to get this uptrend back on track. Bears need to get a finish back down here below 350 to consider any sort of weakness, but they got a lot of work to do to get back down there. Look for these bulls to take this market higher into the week ahead. Next up, May corn futures on the board. Sloppy, choppy week last week in this corn market. Prices opening up on Monday with a nice wide range, trading here all the way up into the 470s and back down into the 450s as well. Bulls tried to reload there throughout Tuesday and Wednesday's action there as it held above that 20-day average. However, this 465 level just continues to be a battleground here. Lots of volatility, wide ranges here as this market is chopping up here in between 460 and 470. Bears need to get a finish back down here below 465. If they're able to do that, that should send us back down here to these range lows, or try and find support at that 50-day average here as well. The bulls do have, even though they can't get some good traction to the upside, we are continuing to see higher lows here as they are climbing that 20-day average. If those bulls are able to reload here early in the 460 area at that 20-day average, look for them to make another run up here at 470. Our other grain markets, beans and wheat, still seeing some upside, but some corrective action over the last week or two here. So if they're all able to align in the week ahead, get some good pullback buys, we should see some upside continue here in these grain markets. Look for those bulls to try and reload here and make another run up at 470. But until then, we should just see some more volatile, choppy action here. Bulls need to get a finish back here above 470 to have a chance at a rally up here into the high fours and up there towards $5. They're going to try and reload here, but expect some more choppy action. These grain markets are going to try and reload here and get this uptrend back on track. Next up, crude oil prices with a nice reload last week here as well. Monday's action opening up there at around $100 and selling all the way back down here to the 20. We did see Tuesday and Wednesday's action balancing out there right on top of that 20-day as those bulls reloaded. Picking up some buyers here with a nice strong rally into the close on Friday up there at 101.18. With that close above 100, that sets the bulls up for another rally potential or another rally opportunity here. Look for any sort of bids coming in above 101.24 in the week ahead to get this market cruising back to the upside. We continue to see elevated volatility. Still going to have this market be at the mercy of the news, so be on the lookout for some breaking news or anything regarding Iran to cause some swings in this market. At the moment, just more wide ranges and some volatility, so be cautious as we continue to see big swings both directions here. But with that nice reload we saw last week and a strong finish there on Friday near those week's highs, should be setting these bulls up for some more upside. Look for them to try and strike back up here towards 105 to 110 early next week. We'll have to wait and see how this market reacts. 120 right now looks like a big climax top here. I'm not sure if we're going to be able to get all the way back up to this area, but we could still see some wide ranges in the low 100 area. So look for the upside to continue here in the week ahead for this crude market. And last but not least, we got our indexes. We did see a pretty weak finish there on Friday. This market has been trading down over the last couple of weeks here. Has been in corrective territory for a little over a month now. We encourage everyone to still remain defensive here, stay cash heavy. Not a great time to be invested in this market. We still got a lot of charts to clean up. Those mega cap names are still looking pretty ugly. The S&P did see that gap lower on the Sunday night open, rallying back up here, balancing out early last week, and then seeing Thursday and Friday's action with some big downside, trading from 66.50 all the way down here to sub 6,400, closing down there at 63.98. Look for more offers next week or in the week ahead below 63.89 here to keep this downside going. Target one here is going to be 61.66. These prior all-time highs here from late 24, early 25 is going to be a good spot to watch for this market to snap down into. The NASDAQ losing some ground here, breaking out of those range lows here finally on late last week. And the Dow also closing at new yearly lows here. Each of our indexes are looking rough. We could see an oversold bounce here at some point in the week ahead, but we continue to see some wide ranges and volatility here. This is not a healthy environment, not a strong market here at the moment. Stay cash heavy, remain defensive here. There will be better opportunities to come, but we should see more downside and corrective action here in these indexes as we move into week 13. That's all we got for the week ahead. We will catch you guys tomorrow night for closing comments. Thank you everyone for tuning in. We'll see you tomorrow.